So one of the most gratifying things of the funding business since we started has been seeing clients be able to purchase more inventory, rely less on their own cash, or even keep cash on the side of the business for those eventual upticks. So that's been one of the most gratifying for me, and I wasn't expecting it to be such a path for success for a lot of the small business we helped. So D, like, tell me, like, what have you seen be the most gratifying?
For me, just knowing like where we started from, just doing, obviously the vape shop and the e-commerce and all that fun stuff. Probably for me, seeing the connection, or like you say, the connectivity tissue between what the poder is, or what the real strength is of someone's personal credit, and how it can like graduate to getting like funds to help somebody's business start, or someone that's, like we did the video the other day, the seasonal business or whatever, like put people in a situation where like they stop grabbing their piggy bank, and then now they're wondering, how do I pay my kid's school, or how do I pay the daycare, or how do I, can I afford gas next? Like just very small things, because, having the commingling of the funds on the personal and business side on, being hosted on just one credit card, and then there's only so much that credit card can take, because, it has a limit attached to it. So for me, it's been pretty cool to see like just the development of us understanding how these profiles work, and then what that amounts to, and then like learning the nuances, the positive things, the negatives, the things that we can do better on clients, like funding troubleshooting, like that. Those moments where we kind of like don't do that great of a job maybe, or we had more juice that we could have squeezed, those to me are probably the better of the moments versus just owning the victories, because it's like now the next client, we know how to handle it better or whatever. So at least for me, those have been the two most important things.
And that's awesome, because I also think, Alex, your perspective is important. You're multi-business owner. You've seen the struggles to start your own business with your brother, from the jump with your own cash, and also not being able to scale as fast because of that. So like now you're helping clients while also helping your businesses. So tell me a little bit more, like how do you see this helping a traditional e-com business, someone who's wanting to start their own practice, if they're an accountant and they think they need so much cash. Dentists is something we're seeing a lot now.
Yeah.
I'm like, a lot of doctors and attorneys, that don't know where to get cash, and they're using their life savings to start their practice or expand. So we'd just love your perspective as well.
I think the most added benefit of what we're doing and how we're helping people is that they don't have to tie up the utilization and go ahead and max out their own personal credit cards and bring their personal credit down. I'll give you a perfect example. I actually have a client right now that we're in the middle of doing funding for, that she has a vape delivery business in Orlando, and she also has some sort of cell phone distribution company. And when I first did her evaluation, she had all her personal credit cards maxed out. She had a line of credit maxed out under her name. And the biggest problem, and the reason what led her to come to me, was she's trying to buy a car and lease a car for her daughter, and she's not getting approved. And the reason why she's not getting approved is because she's using all the leverage that she has on her personal credit to fund her business, including her savings. And now she can't even use her credit to go get a car. So that's really the most important thing in my eyes for my clients, is like, look, moving forward, once I get you funded and I show you how this works, the most important thing is the knowledge that I'm providing to you to always keep your credit score at 800 or 780 or whatever your best credit score is. We don't want to commingle your personal credit for your business finances anymore. We want to go ahead and separate and divide that liability, so that in the near future, if your son calls you and says, Dad, I want to get a new car, or I need to get a student loan, or, I need a loan for my business that I want to start, you don't have to use your personal funds, and keep your credit score as high as possible at all times.
That's great. So yeah, no, look, a lot of good examples there, and it's not one size fits all. So it helps, understanding a little bit more about the business. And what we pride ourselves on continuously, and I think I speak for all us three, is that the customer is at the center. And what we're offering is more a service that provides guidance to them, and less about just dictating a one size fits all. So would love your perspective on like how ensuring that specific customer's profile is ready, it makes sense to get funding. What are they going to utilize the funds for? I feel like those things get overlooked a lot in the conversations that I'm hearing, and it's the stories we hear from their previous experience with another funding group, et cetera, where they're just going in and surgically trying to drop 100K, but they burned their entire profile to the ground because they didn't do enough of an assessment and a prep. So we'd love your thoughts on like how that fits this mold as well.
I mean, for us, I mean, it's important for the client to know that we respect their time as much as like we respect the process in itself, right? So like if they come in and like we see all the time, like there's many instances where a client technically could start funding at that moment in time, but does it make sense? No. You know, are there some blemishes that can get cleared up, you know, before they start? You know, maybe they have a couple collections, or they have hard inquiries that are supposed to fall off because, you know, it's already surpassed 2 years, or their utilization is high. Like we know, you know, because we're in the thick of things with them, that their limit approvals are going to be Y compared to X if they were to lower this and do that and move this way instead of that. So, you know, I think it's important for the client to always understand that, like you and I, for instance, and even Alex, like, it's not that we're taking like a desensitized approach, but it's just like we know because it's just math. Like, it's just math that we're privy to, that we've learned because we've taken the time to learn about these things, versus what the reality is. Like, you go to school, we obviously know what they teach us in there, and none of this stuff. And then on top of that, then you have to get thrust into work if your family's not wealthy or whatever. So it's like you're focused on making bread, cool, but like, when did you really stop to figure out how your bread can make you more bread, or how you can leverage, you know, because people, you know, you hear all the time, oh, well, I don't want to be a personal guarantor. I'm like, all right, well, why don't you just stop for a second? Let's think about that statement, because you obviously heard that somewhere. So let's break that down. Like, why don't you? Okay, cool. Let's look at things in the most simplistic way. Like, this is a relationship, right? Like, you're trying to get money from someone, a creditor, right? Chase, Amex, Wells Fargo, whoever, right? If you screw them over, how are they going to screw you back over? Because you have business plans or projections, or because you think it's a good idea? Like, nobody cares about that. The only carrot on the stick that they have is what? Your personal credit. So they're willing to tell you, like, hey, look, we know you've done a good job maintaining your personal credit for, you know, this amount of time. We're going to give you business products. We're going to give you business products that don't even appear on your personal credit. All you have to do is just not screw us over. So like, understanding it in the most simplistic forms, obviously saying it like that, now it makes sense. But like, sometimes, you know, going back to like other type of funding companies, we have to fight battles that, like, honestly, we were never even a part of. You know, like, I'm sorry that, you know, some company charged you $15,000, $20,000 up front and you got $15,000 in funding. You know, like, we operate our model a little bit differently, but a lot differently actually. But at least for me, it's the patience that we have on waiting the 30 days for the utilization report, or for these inquiries that were supposed to expire for them to be deleted, or whatever. If they have a collection, having the call and do a pay for deletion and getting it removed. That type of patience puts the client in a position where now they're not applying with a 710. They're applying at a 770, 800, or whatever the case may be. Now their limit approvals are $50,000, $60,000, $70,000 per product versus 4, 5, 6K or flat out denials with high utilization. So I think the type of knowledge and the patience that we give to our clients, I think that and the other thing is too, is like, we're in a position where whatever we tell them, that's what's expected. So like, if they get these, like you read in the chat, the 50K bombs, 60K bombs, like, yeah, we get joy from the clients, but we don't get like it's not crazy because it's expected, right? Because we say things very assertively, but the opposite is just as true. If we don't practice this patience, if we don't put the client in a position for them to really win, and they start getting denials, or they don't get as much funding as we kind of hypothesize for them, now it's a bigger issue. Now it's like, you guys know what you're doing, this, that, and the other. So I think practicing patience and putting the clients in a position for them to win versus like trying to get that immediate gratification, I think that's kind of what separates. I think that's why we've been able to pump the numbers that we've been able to pump out, these last few months.
I think if I can make a point, that's a really good point. And one of the things that a lot of my clients ask me is like, why would I get a credit card with the bank when I could just do it myself? Why would I do it with you guys? And my answer to that is always very simple, and it's very, consistent, which is, you can go and you can apply for funding with all these banks that you have relationships with and hopefully get approved. They're probably going to give you a couple $1,000 bucks. But what people hire us for is that experience aspect of, hey, we do things by the algorithm. We know what the banks are going to approve for, and we know your credit profile has to be a certain way. And the reason why we know that is because when we first got into this, I did funding myself for my own businesses. So the best way to learn things, I feel like, is to just get in the trenches. Yeah. And that's exactly what we did with my own profile. We got the business cards with Chase. We got the business cards with Wells Fargo, the ones with Amex. And I always show my clients, I'm like, look, let's hop on a FaceTime. Let's do a screen share. I'm going to show you a year before we started this funding and learning these things, the credit card that I got with Chase was a $3,000 credit limit. Fast forward to after learning all this and learning the algorithm, knowing how the credit profile needs to be for the applications, now I'm getting close to $100,000 in 2 credit cards with Chase. And again, this is something I show all my clients before they even, sign any agreements with us or move forward on anything, because I want to show them that we've been where they're at. We know how to scale these businesses. We're not just giving them empty advice that we don't take ourselves.
Yeah. And I think that's the most important part, mainly because showing the clients that we've done this ourselves is better. There's no better proof out there. Yep. And I always constantly show my clients, and our clients that, look at the stack of cards I have. Do I use them all? Am I overextended? No, but when we need something, like we were discussing before this, for one of the business items that we're doing, I'm like, we need, sometimes you need that 30K card, you drop it, you're at 0% for at least 12 months. If I can't turn that 30K into 90,000 or 120,000 in 12 months, I shouldn't be making that purchase. You get me? No. Or I shouldn't be doing that investment into the business. So I feel like that's a component that tying that back and having and going back to what Dee mentioned earlier, teaching the clients that it's not instant gratification, that it requires a little bit of focus on the profile itself and making sure that client's going to be ready when they go to the bank. And that's the best consultation we can provide. And then the last one that I'll mention that I think is also something that differentiates is the education. Our clients leave the program knowing more about general business, operations, strategy. What should they be focusing on? Because we have essentially, myself as a 18-year vet in scaling businesses from inception to multi-billion-dollar companies, and both of you that have started multiple successful businesses, but also live in the throes of having a very successful e-com business, seeing the seasonality and seeing how the flexibility of this funding can help you kind of scale those businesses in those periods. So I'm actually coming back to you. Now that we're getting close to the holidays and the time to invest is in it's right now in the next 30 days. So how would you recommend, an e-com business kind of leverage, the 0% funding? What could they leverage that for?
I don't want to toot our own horn, as a lot of people would say, but me and my brother have been business owners for around 15 years now. And we've been in the position that a lot of other business owners have been in. We've been at the highs, but we started at the lows. And all the years that we were in the lows, we were getting something called MCAs, which is basically a merchant cash advance loan. And just to give you guys an idea, I have all the documents to prove it for any client that wants to, see this. We had to take out $40, $50, $100,000 loans at 27 to 35% interest rates. Wow. I had to wake up, go to our business and every morning see that $700 are being withdrawn from the business, no matter if there's a hurricane, if there's a holiday. I mean, I know for a fact on holidays they wouldn't take out, but that's a few days a year. But it's very difficult trying to scale a business when you have an outside investor like an MCA company grabbing 30% of your profits. So again, we're not giving advice that we haven't taken ourselves. And that's why I feel like our funding business and our credit repair business differ from a lot of other, competitors. We have an 8-year background in credit repair, so we know exactly how your profile needs to be. But more than that, we don't just get people money. We ask all the right questions. How do you need your money? What are you going to do with your money? Because we want to position you in a way where you're going to be successful with this money. We don't want to just help people get money that don't know what they're going to do with it. And right now, with the economy being that the way it is, with inflation so high, and now you're seeing the real estate market come down, I think now is the best time to have access to as much capital as you possibly can.
No, that's a fair point. And that's one that I actually hadn't thought about is leveraging the current state of the banking and financial institutions that are extending. Essentially, these are olive branches to small businesses that usually don't have access to any funding like the big companies do, right? You'd be surprised. I'm like, the majority of the financials of the businesses I've worked at in my career, it's all debt, and debt equals some level of equity on the business. You can sell that debt for long-term returns. There's a lot of ways to do it, but for a small business owner, debt is crippling. So being able to get access to this capital and not be in financial ruin while you wait for the things to turn around is an important part of what we continue to show our clients now. And I feel I can sense the relief, and I'm not saying this to just say it and invoke some type of feelings, but there are clients who have businesses that are struggling. And the number one struggle is like, how can I turn the existing $50,000 that I have in the business a checking account to be $150K without bearing the burden of the next week? What do I do with having zero in the account? You get me? Like, and that's where I feel like this has been super cool in that setup. But I want to switch away from the funding and talk a little bit about what the current state of credit is looking like, especially with the leakage of the over 300 million Social Security numbers. That's essentially every potential Social Security holder that is in credit like availability in the entire U.S. So if you think about a potential 16-year-old's credit is out there, they don't have any credit, but someone has access to their social, just wait 2 years. These are silent destroyers of your personal profile. So I know, D, you've been an advocate, and, we made a decision as a business to partner with what we consider the top credit monitoring platform in the country. But with just of your thoughts on like how that can help solve a lot of the concerns and more quell the concerns, but then also the impact that having that extra level of assurance versus like using a Credit Karma. Not that those platforms are bad. It's just not, I think, the same level of security or awareness. But we'd love your thoughts.
Yeah, everything starts. You know how I feel about credit monitoring. For me, credit monitoring is it's the seed that creates whatever the fruit the client wants, or whatever it is that they're looking for it to be manifested from that, right? So like, if you're going to do credit repair, you need credit monitoring so we can see what's under the hood. If you want to get funding on your business, we need to see what's under the hood with your credit, because the banks, as we discussed earlier, they're going to run your personal credit. So it's like, and if you're just starting credit, you need credit monitoring so you can kind of see what your scores are. So like, everything starts at the inception is credit monitoring. So if that's the case, which it is, now it's like, okay, cool. Like, well, why would I pay $30, $35 a month for credit monitoring? And I'll tell you why. So you can have visibility on and be able to track like objectively what you're looking to do in terms of your short and long-term financial goals. Like, yeah, if I'm standing on a canyon or whatever, and there's a mountain across, 1,000 feet away, and I say, yeah, I want to jump Chris from this mountain to that mountain or whatever, like, that's cool. And like, yeah, ideas are cool, but like, so what? You have to put things in place to get from point A to point B. It's not just a matter of I want to get to there and I'll figure it out along the way. No, like, having credit monitoring shows you and it displays like what your bill due date is versus your statement closing date, how many inquiries you have in the last 2 years, what deems you as credit seeking, how to keep, your utilization rate down, how many products you should be getting per calendar year. So those two, and then knowing you can get credit limit increases using the Scorecaster. Credit monitoring gives you $1 million in fraud protection. So it's like real-time alerts if someone runs your credit without your authorization. So there's so many, it's probably easier for me to like tell you like reasons why not to, because it's a shorter list, and at the end of the day, like, if you don't have credit monitoring, then like, don't try to have adult-like conversations with me if you're not ready to have adult-like things in your life. Like, that's where I'm at. Like, that's when I'm speaking to a credit repair client, that's one thing. But when I'm speaking to like a funding client, as an example, like, this is the path. This is the way it is. Like, you're going to be structured because I'm structured. My partners are structured. You're going to have discipline because that's what we have as well. And if you follow these things, you'll reach wherever it is that we're trying to reach as a unit. But it can't be, you want to have these set of rules and then, no, like, every successful person that I've come across has some form of credit monitoring. That doesn't mean you need to invest $30, $35 a month. But if you have it, run it. Stop being cheap. Run it. And it is what it is.
Well, I mean, to further, of everything you said, the most important thing to me, and again, we've been in the credit repair industry for the same amount of time, but everybody has a different opinion, right? how much a month do you pay in home insurance? How much a month do you pay in cell phone insurance? I pay $12 a month in Assurion, and we have 7 phones on our plan. So we're paying around $80-90 in insurance for our phones. How much money do you pay a month in your car insurance? Everything. But you don't have credit insurance. You don't have fraud protection for something that is very valuable to your life, your 800 credit score. So, fraud protection may not apply to people that have a 500 credit score because, let's face it, and I hate to say this, if someone steals your credit and you have a 500 credit score, there's nothing for them to steal.
Yeah.
But if you are above, a 600 credit score and you can get approved on applications, whether it be with, Credit One or it be with American Express or Chase, you should have a good credit monitoring service and have that $1 million fraud protection in the case that somebody does steal your identity, which can happen in seconds.
Yeah.
So that to me is the most important thing, is having that fraud protection in place. And then I think secondly, it's how many times do we log into our checking accounts? How many times do we log into our credit card accounts to make sure that nothing's being stolen? But if you're not logging into your credit monitoring service, you don't know what's really happening with your credit. And then what? You're going to wait until something does happen to then find out and then be reactive. It's always better to be proactive in every scenario. So that to me is also a very big point.
And I think the alerts are an important one, mainly because, and I'm not product seeking or anything, but we actually had a client before we were setting up for this podcast that called. He just got an alert from Identity IQ letting him know that a collections account, which this guy has an 800 credit score, so definitely not a profile that would have a late payment or anything like that, was a closed account from 3 years ago from Comcast. And I guess the taxes were never paid. It was like $57 on a final bill of like 600 or something. He paid the final bill and then they processed the taxes bill after, but he had moved from the home. So he never got it. It's not on his profile. Like the account's been closed. He's been under AT&T for 2 years and he's like, what do I do? And we tell him, don't worry. Yeah. Now that we know, we can approach it through the lens of what's necessary for that client. So that's the alerts gives you like
peace of mind,
a cheat code too, a peace of mind. But it's a cheat code because you can get ahead of something negative, like getting
versus
worse
seeing on your report 2-3 months later, and then it's a $57 collection, but that's the difference between you getting funded and not getting funded. Yeah. Because at $57, what are we talking about? Yeah. But if you had the alerts, you'd be in a good position.
Exactly. Well, back in 2020, we were working a lot. Our credit repair company, we were partnering up with a lot of brokerages. We still are. A lot of realtors in Miami, nationwide, some. We had a client that she actually put an offer on a house. This is a very successful business owner. If I'm not mistaken, she was a dentist. She put an offer on a house. The house was an amazing price. This was pre-pandemic. When the mortgage broker went to run her credit, she had like a 5-something credit score. She's like, what's going on? I've never had a 500-something credit score. This lady has Platinum American Express, Chase Sapphire Reserve. She's got great business credit. So she's financially very stable. Long story short, someone had stolen her identity. So she came, referred to us, and she's like, hey, look, all of this was, all these collections and whatever the case may be, this wasn't me. This really was fraud. And I told her, listen, no problem. We're going to get the police reports. We're going to submit everything to the credit bureaus to go ahead and get this disputed. But unfortunately, that's a process. That can take anywhere from, 2 days to get those negatives removed, or it can take 30 to 60 days. And it really has nothing to do with us, and it has everything to do with the credit bureaus. So unfortunately, in that time frame, she lost the opportunity to be able to buy that house, and the owner of the property ended up selling it to someone else because their credit profile was ready. So it's not always being reactive, like we said. It's being proactive, because you never know what can happen to you, and you never know what opportunity you're going to miss. Yeah,
like you mentioned, logging into your bank account, et cetera. I'm like, this should be second nature. And I'm like, you do have other options. You have like Credit Karma, who only reflects TransUnion and Equifax. But you also have Experian as well. But I'm like, those are individual logins. You have to remember, you got to see things are matching. So there are a lot of stuff that can impact your ability to not only get funding, but get approved for credit for normal day things, your cell phone, all that stuff. If you have a mismatch, addresses, incorrect spelling of your name, those are all fraud alert protections that will come up on the creditor side that you're trying to seek credit from.
No, the thing is, most of these credit monitoring too, like especially the one we have, do-it-yourself credit repair is already included.
Yeah.
So like, yeah, you get the comprehensive report showing all 3 scores in one central location, but you also get the ability, if let's say you do have negative items, you can go ahead and dispute it directly from the platform. So it's just like, again, another, like, I'm trying to figure out reasons why an adult wouldn't have that on the, in their cycle.
You have access to the report. You have access to fix anything on the report yourself, and have the visibility when it updates that it's actually fallen off. I mean, I'm like, it's a no-brainer in that scenario. So that's why I wanted to bring it up, because I'm like, every day I'm getting calls, and I know you get calls too. You get calls too now. It's like, and a lot of our clients are in South Florida. They speak Spanish, so like when they see their credit and they take it seriously, they're like freaking out because they think someone took their credit. But we know that there's safeguards within Identity IQ that gives them that fraud protection. But it also hopefully puts them in a perspective where they can take control of their own credit versus allowing, that situation where they go and buy a car, they're assuming they have great credit. But I mean, it should never be an assumption. It's 2024. You can log in, see everything. And I feel like that's a component of going back to Dee's earlier statements. Like, you get to a certain level in your life where those are just the small things you have to be responsible about, because it's not just you. You have a family, right? Like, if you guys need to move, what's the worst that can happen now? You have to stay in that house. You kind of potentially sold it, or you already gave up, and you're just because you're assuming your credit's great. Yeah, the smallest things now impact credit.
No, and the opposite is just as true too, right? Because we're talking about the people that like just don't even care to like look at their credit. They don't want credit monitoring, but then there's the other side. The people that they have credit monitoring, it's like they hit us up every 2 days. Hey, my score decreased 3 points. What happened? I'm like, come on. So like also letting clients know, like, look, your score is gonna fluctuate every day. It's gonna be one score on Experian versus another score on Credit Karma versus another score on MyFICO versus another one on Identity IQ. Like, depending on which day of the month they pulled it from, which day it's reporting, if it's FICO versus Vantage, like there's so many factors. But as long as all 3 scores are relatively within the playing field, there typically isn't an issue from what we've seen.
And are you guys seeing, because we're helping clients every day, but more and more I feel like the name of the LLC, I know we know this, but I'm starting to see a lot of clients that are coming to us with like investments, crypto in their names, or like real estate. Yeah. And I'm like people who said they're real estate, but they haven't even never sold a house, don't even own a property, are starting that business model, but they're not even going to be realtors. They're going to be investors. And we recommend clients to ensure that those parts are not in their naming structure. Also, like, it's not necessary because you're not going to have like a front end crazy website that the name has to be very like Lux Realty or something like that. Would love to get your perspective. Does the name really matter?
Yeah, I mean, if there's any advice that we could give for free to anybody watching, our videos and our content, right, is when you go to open your business, think about it as building a house. You have to lay the right foundation. You have to hire the right plumbers and the right electricians. And the same thing you can correlate to your business name. If you have, Alex Investing or XYZ Real Estate, the bank is not going to want to lend you money, because at the end of the day, they don't want to lend people their money that are going to go ahead and invest it into other things. They want to go ahead and stimulate the economy, small businesses, painters, contractors, consulting companies, tech, companies, startups. So you have to be very specific in how you structure your business and what you call it. You don't want to put these, gray area names into your LLC. That's just what I've learned. Don't put the word investing if you're going to go ahead and need money from the bank to invest. If you're going to call it something investing, then you have to take that business model and not knock on the bank door.
Exactly. What about you, D?
Yeah, I mean, you handle the applications more than us. I mean, you've seen, what the effective is. I mean, we literally remember in the beginning, we had a client that we said, hey, okay, set up the Sunbiz like this, boom, boom, whatever. Goes ahead, he puts it as consulting marketing. He walks in the bank and he tells the banker that he does investments. Yeah. And it's like, A, no, you don't.
Yeah, you really don't.
Like, you really, like, for in this case, you really, really don't. And B, what are you doing? And then so, and it's just, it's more from, and going back to the relationship component, like, just think zoomed out. Like, why would the bank give you money so you can give somebody else money.
Yeah.
Like, why would they do that? They would never do that. So like when you have investments or even financial services or whatever, like you're just telling them, hey, here's a red flag, guys. I'm a walking red flag. So if because you saw it in a movie or because you thought it looked cool in a TV show or whatever, like run it. Let me know how it works out. But I've seen enough denial applications, you more than me, where we know that like it is what it is. You can run it. And then also having like, there's also restrictions like with smoke shops, things of that nature. So, there's a lot of restrictions across the board, and it's just a matter of like knowing how to apply so you look funding worthy, funding eligible, low risk, because at the end of it, this is a song and dance. This is a relationship from a consumer with the creditor. And if it's done the right way, it can be a nice, harmonious thing, very beautiful. It can blossom nicely. But if not, you're going to run 15 apps, you're going to be heated, you're going to blame everybody else, and you're not going to understand the reasons why. So, hopefully content like this and like this type of like engagement, this dialogue really lets people know like, okay, there are people out there that know more than me in this area space. Yeah. Same thing for like, you've seen me around my crib. Like, I don't know how to do a lot of like handyman shit. I wasn't taught that as a kid. Like, so like I lean on people that are a little bit more, know-ish than me in that area space. And if not, then like I'll do it myself. I'll learn. But
even in this space, I'm like, we're learning every day.
Yeah.
A lot of this is troubleshooting, understanding like what's available, what's the type of profile that makes the most sense. We turn clients away all the time, not because we're big-headed or we're arrogant or anything like that, or very specific. Sometimes it's not a fit. Some clients want money tomorrow. And I'm like, the options that'll give you money tomorrow are very expensive.
Yeah,
you talked about the MCA loans. Yeah. Those are there. And I'm like, while we're against it because we don't think it's going to be the optimal experience in your like small business lending path, because it introduces a lot of stress on a daily basis. Every morning you have a certain amount deducted, whether hell or high water. So that's the type of perspective that we kind of gauge in our conversations. You mentioned it in understanding the business, making sure that like we know what they're going to use the funding for. All these things we don't ask we don't only ask because we understand what they're going through. We ask also because we know what's the best way to position them for them to get access to that capital, but that they also have a plan to exceed the capital that they're going to leverage. Because it doesn't do us any justice or any favors.
And how do we get there?
Building the relationship.
How do we get there? Because we had a couple clients in the beginning. They're like, wow, Chris, Dimitri, you guys got me 100K. I only really need 20 or 30. Can you help me invest the other 70? And then short answer, yes. Right answer, no. And the reason why is because now you're in what we're trying to teach you of keeping church and state separate between personal and business. Like, we're here to help you guys acquire money. That's it. You're supposed to come in here knowing what you're going to do with the money. So like, that's another thing too. Like, and we know how we are now with clients. Like, hey, if you don't know what you're going to do with the money, figure it out during this time frame, or don't do funding. Because if not, it's not going to make sense whatsoever. And then, there's a lot of funding companies out there that, they'll grab this client's money, this client's invested here. Sometimes it works out. You go on Reddit, most times it seems like it's not working out. So, we don't do that because it's just too much. Like there's no need for that. Helping them get their money for their own business to scale their own things. We don't need to intermingle things. We don't need to go do, things outside the boundaries or the confines of what our agreement states, and that's it.
Yeah, we're not trying to be the best at a bunch of things and the masters of none. We are dedicated into being the master at getting our clients money. There's a lot of other funding businesses that I see, like my brother said, they're getting their clients to invest in cryptos. They're getting them to invest in, their stock investment company and their holdings company. And then,
real estate. Yeah,
real estate. Or, hey, let's buy cars and let's let's upgrade the car and then sell the car at an upscale. And then you're creating this spider web of mixing funds. We don't want to do that.
Yeah.
We want to help show you what we have learned for our businesses to help them scale and show you how to master your personal credit. We don't care for all these other things of investing money into our funds. Again, we just want to show our clients, give them the education they need to never be in a tight position again, scale their business, and get the right products, build the right relationships with banks. You said something earlier, getting a quick MCA loan. Yeah, I used to get MCA loans. We used to get them for our business within 48 hours at a 30% interest rate. We're not working those kind of products. We're building relationships. We're laying the right foundations to build a beautiful house, like we said.
Yeah. And that house, the beauty of that house is it can expand year 2, year 3. Because, you buy a 3-story, 2-bedroom house, to use that kind of, perspective. But like you build that relationship strong enough with these banks and creditors, like it's lines of credit next year with the business and you have personal and business with that bank, you build a stronger relationship. And that's one of the biggest components is the amount of times we speak to customers that are in the program pre-funding and the clients are like, man, like I had no idea I can get credit. And but they've been with the bank for 12 years. But that's a problem with who? The bank too.
Yeah.
Like not wanting to showcase that you have these 0% products, which help create stronger growth in these small businesses because that's the number one thing they need is access to capital. That's the part where I'm like, I'm amazed. I'm still amazed.
No,
I'm like, we've been doing this for, we're almost at $6 million in funding in less than 6 months. Yeah. And I'm like, may not sound like a lot for a lot of folks, but you try to get a business, $6 million in funding from nothing with zero in ads, $0 in ads.
No marketing.
Our businesses are coming to us because they hear from who the customers have already gotten funded.
No, and the other thing is too is like and one of the other coolest parts to me in this is like, yes, we're getting the client's money, cool, fine, but now the client has any issue with their Chase or their Wells Fargo or their U.S. Bank or their Truist or their PNC or whoever it is. They're calling their BRMs, their business relationship managers. So they're calling a person. They're saying, hey, remember me? We met me. You're my assigned BRM. I have this issue. So now you're not calling a 1-800 number anymore. You're not feeling like a number at a deli line. Like you're being taken care of with probably what we need more in the world right now, which is more human to human interaction. So it's like that to me is another cool part of this engagement too, because you're not. You hear this, I say this on the phone all the time. You're not meeting up a friend of mine at LA Fitness to give you a bag of cash you pay me every week. You're going to go to Chase. You're going to speak to Chase's BRMs, Wells Fargo, Amex, whatever. And then from that point forward, those are the relationships that you're fostering moving forward. Because if not, bro, it's like, then what are we doing? Yeah.
Right. And then also like, there's a lot of perks to this that I didn't know about before we got into this, right? And a big one of them is, hey, what's the added benefit of getting these products with American Express, Chase? Well, I'll tell you, points. You're going to get, for each credit card you open, you're going to get around 100,000 points on average, signing bonus. So next time you need to book a trip, you have 24/7 concierge to book whatever trip, whether it be flights, hotels, to anywhere in the world. Before I didn't have that. Before when I wanted to, take a vacation with my wife and my kids, I'm just going on Google and putting flights from Miami to Barbados or wherever it is. So, there's a lot of perks in taking advantage of business funding.
Yeah, that's awesome. So, and I agree. I'm like, I try because I'm in the process in our program that I help the clients actually get and apply, right? So I'm speaking with the banks and all this stuff. I tend to forget the points and how that could be a
the
positive.
Points are sick.
But I personally don't lead with them because my focus is to ensure that they understand like the mix of the funding we're going to get them access to. But then I always tell them, I'm like, let's make sure you spend the $5,000 in the first 90 days to get the 100,000 points on Chase or on the Amex. You make sure you spend the 3,500 to get 75,000 points. These are real points. I actually just booked. We're going to London in like 2 weeks. We're going to be shooting some content there, hopefully. But I bought, my stuff with my points. Like, and it was that was like a week ago.
There's different worlds within this world. Like this is just one door that leads to like so many more. Like the point redemption for airlines is one thing. For hotels is another thing. Yep. For like cashback is another thing. For like, online purchases, another, like there's different worlds and different for people's different preferences. Like I love redeeming the points for airlines because I don't want to spend $3,000, $4,000, $5,000 on business class. But I'm also not trying to fly 9, 10, 12 hours cooped up.
Yeah.
I'm not trying to do it. So, the websites that we've got like seats.aero or point.me, those show you like, hey, you don't have to go on a weird mission trying to find these point redemption dates. Like here it is, boom. And then the England trip, the one we're going on, what 47,000 points and like $500 out of pocket.
Yeah.
Not even business class, first class.
Yeah,
on Virgin, it's like
that's wild.
The flights itself, the taxes and fees of $500 is whatever, but the 47,000 points, like you said, signing up for one credit card, you're probably getting 100,000 points.
Yeah, you get
just
two.
for spending it.
Yep.
2 potential business or first class flights just by using your card for the business,
Just
which is
knowing.
what you're doing anyways.
Yeah, we have so many points right now across all of our business products that like it's overwhelming, honestly. Like
Yeah.
we're booking vacations for like the next year and like at a third of the price that we would usually spend,
Probably
which
more.
then, gives me more access to my own capital and I'm not dishing it out
Yeah.
to the airlines or the hotel companies. And now I have more money in my pocket, which at the end of the day is all I really care about is how can we save money and keep it in our families' homes and keep it in our pockets to, better ourselves.
Yeah, and I think that's the opening and allowing you to travel with your family is also amazing. Because I'm like, like going to Barbados with a family of 4 or 3 or 5. I'm like, once you have kids, and I'm not from that type that I love my family. I love hanging out with my family on the weekends. When we go on vacation, I'm going to Santa Marta at the end of October. With my daughter, my wife, and I'm like, she loves that place. So like, I look forward to being able to take her to those things.
Right.
Because I'm like, before it was like, oh man, we could do one of these a year because I got to use my personal cash. Like, the problem is I'm not even putting that on the business. I'm just using the points that I got for my normal business expenses.
Well, also there's another component to, the great part of having good business credit cards and good business relationships. And that's chargebacks. Let's say your card, you go ahead and you stay at a hotel. This has actually happened to me. I went to the Keys. I stayed at a hotel. It was horrible. It was not what they marketed. The room was very, very dirty. We ended up booking 3 nights and we only ended up staying 1 night. And we actually left at like 5 a.m. because me and my wife were like, we can't sleep in a hotel without any AC. So the first thing I did when I woke up was call American Express. And I told American Express exactly what happened. I didn't, say anything that wasn't true. And sure enough, I got a full refund back because the hotel was not in compliance with what they were marketing. So, there's a lot of perks to having great business credit cards and good business products. But I think more than anything, it's building your relationship with these banks to get bigger credit limits and lines of credit. And one of the things that a lot of my clients ask me, they're new business owners. Hey, I just want a line of credit. I don't want credit cards. Okay, let me ask you something. Do you know anybody that would give you a line of credit for your business right now? No, you don't, because you don't have strong tax returns. Yep. You don't have a lot of money in your checking account.
No P&Ls.
You have no profit and loss. So if you don't know anybody that would give you money for your business, why would the bank do it?
Yeah.
You have to be realistic and put yourself in their shoes. And again, this is why I tell all business owners, you need to start from the bottom. You got to get the low-hanging fruit, the 0% interest credit cards. You have to build the relationships. Even though you don't need a Citi credit card, let's go ahead and open it so that you can let them know you're here. Yeah. So you can start building your points, start building your relationship. Then in a year from now, Citi goes ahead and drops a 4% line of credit product. You already have the relationship. You get the product with one application.
They take care of their own.
Exactly.
Yeah, and I think so. That is, a really good segue into the next phase that I'm thinking about for clients. So we talked about ensuring that you structure the naming convention right, that you have your personal credit on check, that you have the theft protection through Identity IQ, that you are looking at this through the lens of making sure that you're going to make more than the 0% that you're getting charged every time you use these cards. And then the final one that I think will wrap a bow on this conversation is making sure that the business style and perspective of the growth is understandable. You and I talk to clients about this, and you talk to your clients too, because I've overheard it in the pit. Is a lot of these clients, they don't really know what they want to do. They have an idea, and I'm like, we're not. And I'm going to be very clear: we're not the company that's going to make your idea come to life. No. You have to ensure that idea at least passes the muster of us three, at least for our business, because we've done this multiple times. So it's not like we're going to be like, nah, but it's not going to work. We're just going to be like, you need to think a little bit further about this. Right. But we're not going to do the thinking for you. We're just going to let you know. And it may not be the right time to get funding. And I feel like that type of relationship with our clients is such a unique perspective versus like taking everybody in regardless because we're going to make money off of it.
Because the thing is they realize it's happening.
Yeah.
You know, and it's not even like, it's not even about like calling their bluff or anything. It's just like many of these clients or just people out there in general, they're like, if I had 100K, I would do this, and then it's just the 100K that's holding me back. If I only have 50K, I would do this, and this, because that's all that's holding me back. And you've seen it. We've seen it. These people get the bread and they're like shocked. And then it's more, and this happened with us many times. We're like, hey man, you wanted this money, right? Go fucking work for it. Yeah. Go work for it. Because we live in a day and era now, like in this year, you can build $1 million brands just by having an engine, going on Fiverr, hiring someone to do your graphic design, your website, someone to run your ads. You can go on Shopify. You can hire a Shopify expert. You can literally do all of these things with a 0% interest credit card and build whatever it is you're looking to build. So at that point for me, once the client has access and there's still kind of like pushback or like unsureness or they're not ready, it's all on them. It's all on them at the end of the day. So it's just like, now it's game time. All the things that you said that you were thinking, now you have the access that you need capital to. Let's see how really about it you really are. Let's see what you're made of. Because if you can prove concept and you can, like he said, you can outperform the interest rates attached in the introductory offers of 12 months, 15 months, sometimes 18 months at 0%. Now you're in a position where, like you said, when you go back to the drawing board in year 2, now you're gonna get lines of credit for 100K here, 100K there. So now you can 2 to 5x multipliers of what you did in year 1. So show everyone, but more than anyone, show yourself what it is that you're capable of now that you have access to. And then sometimes seeing that with clients, sometimes we're like kind of like in that coaching mode where we have to like kind of like tell them like, hey, let's go guys. You know, so getting the money is one thing, but taking the first step to me is an entirely different engagement.
Yeah.
Yeah, but I mean, also too, like everybody's got a great idea. You know, me and my brother have had, and you were part of one of the businesses, it was a great idea. You know, we started an exotic snack business, you know, like 2 years ago. We started a website and we all worked really, really hard. All of our friends were buying from it. We got some good ads up, but we didn't do the research. We didn't do the research into how many people were actually shopping for these products. We didn't do the research into what the cost per acquisition needed to be. We were just running ads blindly. And, you know, that's another stripe on our shoulder as business owners. Do your research. That's always the best advice I give people. Yes, getting you the funding, no problem. We're going to get it for you. We're the masters of that right now, right? I think we can all agree we've pulled off some crazy numbers in our first 8-9 months of business. So getting people the access to the capital they need is not even a speed bump on the road anymore. The most important thing, do your research. Yesterday's price is not today's price. What you knew yesterday, do today's research. Maybe things have changed. Maybe the price of the keyword that you're targeting on Google, the cost is higher. Maybe Meta doesn't allow those ads anymore. So being as prepared as you can and being proactive with what you're going to do with these funds, in my opinion, is essential.
No, and I agree. So look, I think that, you know, kind of puts a bow on everything, but I'll close out with, you know, that exotic snacks business, while didn't scale to where we thought it was, sold really well because
it was hitting, but
it sold. We sold it to someone else who had a lot more stock and inventory. But I'm like, the reason why they wanted to buy it for such a good price was because the work that the team put together to get the SEO up. Right. But the only way we could do that was with 0% cards. Right. Yeah. And I'm like, that's the, like, yes, was it an L because the business is still not with us 100%? Yeah, of course.
It's another strike. It's the perspective.
But it's a perspective because
the 100K
is not our savings.
100K sits there. Now we know. We do a balance transfer of 100K. Yep. Now the 100K sits on a new set of cards for 0%. We got hit with a one-time fee of 3%. Who cares?
Yeah, like we didn't have to refinance our mom's house to fund our business.
Yeah.
And, you know, you hear these crazy stories. Oh, I sold my wife's watch because I needed money for rent for the warehouse, or, you know, I had to sell my car that was my dream car. Whatever it is, you should not sacrifice your personal finances to fund your business ever.
Yeah, and I think that, like I said, puts a bow on it. We'll have more conversations like this that can help our community, and we can ensure that we get to a point where folks are learning how to leverage the capital that they're getting, potentially pay vendors that only get paid in cash, with those cards. So I hope folks found this useful, and I look forward to having more conversations with you guys around this. Thank you.